Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. There is a lot happening, so I'm going to apologize right from the outset for this potentially being quite a long video. We'll see how we get on. But the dollar is collapsing, ladies and gentlemen. I can't help but feel like the dollar still actually may go on to put in new all-time highs. And I'll explain the reason why. But as of right now, this is capitulation we're seeing in the dollar. This should be very, very good for the crypto space. But we know right now, so the correlation between Bitcoin and the dollar is evident. It's very general, but it's extremely applicable, okay? The reason that we're seeing both Bitcoin and the dollar go down together, if it wasn't for FTX, you actually probably would have had Bitcoin, approaching and getting up to these sort of levels here, in my opinion. Your 24, 23, 25K. But FTX was a real contagion, a real capitulation event, and this has really shook the crypto space. So we're actually seeing, as a result of this event, the cryptocurrency market, and it does happen, guys, even though they're general correlations, if there's internal issues, then things get, sort of thrown out the window a little bit until they don't. It still very much matters, and the fact that the dollar is going to reassert itself does matter, and for the reasons why it's going to probably reassert itself really matter. And we're going to talk about liquidity. I really can't help but stress liquidity and its importance, as from an investment point of view, enough. But we are seeing, the US stock market absolutely rocketed yesterday. This is a setup that I like to trade on the small time frames. When you get this kind of double bottom, but the second bottom is slightly higher than the first, shows a kind of lack of sell pressure. You can see one over here. This is good trading setups that I actually quite like to take. But the problem that I've got is I don't think we're out of the woods yet. And I think that, okay, yes, we know why markets rallied yesterday and why we saw the dollar roll over, is because of a lower CPI print, which shows that inflation is coming down. Inflation is coming down, in my opinion, as a result of deflation, demand destruction. We got the UK, and I think I have this here, UK GDP stats, which is showing, further continuation to the downside, which we're getting a sort of slowing down in the economy. And this is as a result of high interest rates. And until we get a pivot, a true pivot, and by a pivot, what we mean is that the Fed stop upping interest rates and actually start to undo them, not just pause or slow them down, then we still maintain that markets have more pain to come, as there's continued liquidity drain from the system. So we are really seeing a capitulation in the dollar. This falling wedge completely goes out the window, or this potential falling wedge completely goes out the window, and we do need to look for some sort of other structure, either continuation to the downside or the upside. Bitcoin usually would bask in this, but the problem that we've got is we've had such a massive event take place within our space. It's very much, and I'm going to do this, I'm going to pull up Luna over this chart. It's very much Terra Luna-y. And what I mean by that is, in terms of just how significant and just how much leverage this is really revealing. You can see that we had the sort of Terra spill, which caused the entire market to spill, but there was actually contagion in this. And even though Terra had kind of reached a bottom, the market, this is Bitcoin, actually hadn't. And this is my concern with where we're currently at. I do not believe that. What we'll do is we'll leave this on, and just to really make everybody nice and confused, we'll put on the FTT. I see a lot of similarities between this Luna situation and the FTX situation, and the fact that I think it's very likely that we are going to see contagion come out of this, and we're going to see continuation and further unwinding of things take place. I've been looking at Nexo, I've been looking into Genesis Trading. It reveals $175 million of funds are locked in FTX. We also have BlockFi, which is limiting platform activity, including halting clients' withdrawals. The problem with the FTX issue is it has contagion. And by contagion, I mean it affects other people that were invested or partners with FTX. And I don't think we've seen the full might of that play out. And we spoke about, I did a video yesterday about 6:30 where I really spoke about why this rally is happening. Again, remember that setup we just spoke about? Just as a little side note for anybody that likes to day trade. But, you know, the problem that you have with markets that have this kind of an event is people get too aggressively short down here and it causes a real short squeeze. And then we had the CPI, which would have propelled that. The issue for me with this rally is you'd think it would be a lot more fierce, given what we saw with the CPI and given what we saw with the US markets. You know, the UK markets are down today. Gold is marginally up. The dollar, of course, is getting smashed. This should be really good for the crypto space, but we're in this kind of weird situation where potentially it isn't. And what I mean by that is, you know, because we've had all these internal issues and we're yet to see the full force of it, I think if you know, we were going to get some sort of a monster rally, we'd have had it, and we'd have very much had that V shape. And I think the fact that we're sort of struggling here, you know, for me, if you want to get bullish, you wait until you reclaim some of these levels and you retrace the sort of move. That's real strength. This is not real strength. This is just a relief after a capitulation, sort of black swan, if you will, event. So there's a lot taking place in regards to the CPI. And in regards to the dollar, this is the US dollar. It's having its worst day since March 2020. So the only other day that was worse for the dollar was, of course, what took place in March 2020. And before that, 2009. So is there something to be had from that? Potentially. This is the US CPI, urban consumer commodities, less food and energy, and the US CPI, urban commodities, less energy services. So this is looking at both food and energy. You can see that food is actually climbing in the orange, but energy is coming down. And we had looked at this in regards to oil and a number of other things. Inflation isn't just going to keep going up continuously. The issue for me is it's going to be a persistent problem. So yes, we're seeing it come down, but we're seeing it come down from a high. Does that destruction of inflation, you know, what does that look like? Does that continue? Does that plateau? Or does it actually rear its head? And this is all going to affect markets. And I think, yes, okay, markets that were very aggressively pricing in interest rates and you know, were very doom and gloom, they're going to have periods of relief. And we can see this. If we look at the euro dollars, love to leave the draw tool on, we can see the euro dollars actually, you know, reared its head in terms of pricing interest rates at less of an aggressive manner. It's back to 5% interest rates, whereas it had actually gone at one point below that sort of 5%. And we can also see we had a similar thing on our 30-day Fed Fund futures. And this is all on the back of the CPI. So the CPI news was technically good for markets in regards to that it's going to cause the Fed to slow down. The issue is why is inflation slowing down? It's because of demand destruction. It's because we're in a recession. It's because, you know, people are broke. And I would argue that in that kind of a market, you know, bull runs don't, or rallies aren't sustained and turn into a bull run. There's no reason for a bull run to ensue here just because we've had this low point for the price. You know, this is why we're not interested in actually getting in here yet. We will be. You know, there is going to come a point where we will redeploy capital. But until we see reason to, there isn't just a green day in the market and things are rallying and inflation is coming down, but this hasn't led to a pivot. Talks a pivot back, or talks about a pivot back, but they're not malleable in the sense that, you know, we've dismissed this pivot narrative the whole way down, and people still see a lot of big players out there that should know better, don't understand what a pivot is, right? Pivot is an undoing of interest rate rises, or interest rates, I should say, not just the rises, and a reduction in them, not just a stopping or a slowing down. Remember that, it's very, very important. We get bullish on markets when liquidity gets freed up from the debt markets via interest rates coming down and can now free flow into other markets, and we really try and watch that flow. This is from Cross-Border Capital. Wall Street, SPX and S&P 500 resembles a golf ball bouncing down flight of the Fed liquidity stairs. Q, are the Fed stairs still going down? So you can see this is the US money markets net flow. We've also looked at the US M1, and you can see you've got the S&P 500. And you can see the direction. You know, markets are just liquidity driven. This is the whole game of investing, ladies and gentlemen. It's that simple. And we're still not in a sort of situation where the money supply has been turned back on in terms of the tap, or it's, you know, we're in a very restrictive sort of liquidity situation, which is why we still bias more downside. And the thing you've got to understand is, okay, we've only just had the last 75 basis point interest rate hike. There's a lagged effect on the demand destruction that we're seeing. This is why we're seeing inflation come down, guys. Not because they solved any of the supply chain issues or anything else. So there's a hell of a lot going on. You know, we know what's happening. We know why what's going on is going on. And it's really trying to navigate these markets. This is something that I'm going to do a longer video on because there was definitely some funny business with FTX and Solana. We spoke about the fact that Google had actually brought out an announcement very, very conveniently just to flush out all the shorts and, you know, potentially pump the price, providing a good exit just before Solana crashed. It's almost like they knew that was going to happen. And there was also a hell of a lot of activity looking back in hindsight with big players like Nexo, some of the massive Ethereum wallets, Jump Trading, Circle Deposits, Token Millionaire, High Balance, ETH Millionaires, you know, actually getting out of FTX just before the crash. It's almost like they knew what was coming. There's a lot of funny business taking place, ladies and gentlemen. So to wrap everything up, we've actually kept this video rather short and sweet. We still bias that there's more downside. Yes, we know that the dollar is falling. We know the reasons why the dollar is falling. The problem is, you know, I think this stays more of a persistent story. And really, for me, it's actually a very poor show that Bitcoin has only rallied this much, given just how bad the dollar's down and given, you know, that, okay, and ask yourself this question, if this lower print really meant that a pivot was around the corner or, you know, on the table in the near future, or this was the generational entry for the cryptocurrency market, believe me, guys, you would have seen a far, far, far greater rally than you currently have. You know, you'd have seen this kind of a V-shaped recovery, which I don't think we've seen just yet. Doesn't mean that it doesn't happen, but we keep on keeping on until we see reason to do otherwise. That's all I've got for you in this video, guys. If you enjoyed the content, a like is always appreciated. So is a comment. I hope you appreciate these sort of macro coverages where we really try and piece everything together and solve the puzzle of investing. All I've got for you in this one. See you in the next one.